please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And took advantage. So what we have here is one of the great success stories of development so far, although still only up to a certain point. All of that said, India is different. And in some ways, India has done some things that are quite unique. Last I was able to check the numbers, India is now a major exporting country. Its exports of services are roughly comparable to its exports of manufactured goods. That's unprecedented. Nobody, certainly no large economy, has ever done that before. This is a new phenomenon in world economic history. It used to be that we just said services are not tradable. Services have to be provided locally. You cannot, aside from transport, nothing really can be exported as a service. That is no longer apparently the case, and above all, in terms of countries that have managed to do a lot of service exports, India takes the lead. And it's actually interesting. The other major exporters of services are basically in the business of providing financial services. So Britain is an exporter of services, but what we're really talking about is banking in the City of London. India, of course, is exporting a much wider range, everything from outsourced IT. I mean, call centers is actually almost receding into the past, but was one of the first places where people became aware of it. But this is something new. It means that India has followed a very, although it's part of this great globalization wave, it has followed a different path from those of other developing countries. Instead of a manufacturing-centered entry into the world market, India has in large part had a service-centered excursion into the world market, which is something new, something different, and I think possibly, as I'll explain in a couple of minutes, something that might work very much in India's favor as we look at the days ahead. All right. Back to the world economy for a moment here. There's a common myth that says that globalization always increases, that the integration of the world economy is a straight upward line, that trade always grows faster than income, that the world always becomes smaller. History tells you different. History says that globalization has come in waves that sometimes recede, so that we had an enormous increase in world trade between 1870 and 1913, but then it fell back relative to world income to about half what it had been. And that was partly because of wars, largely because of protectionism, a little bit because of technology. One not often understood point is that to have growing world trade, it's not enough to have improving transportation technology. Transportation technology has to improve faster than the technology of production. There's always a kind of a race between reducing costs by just producing things more cheaply here versus reducing costs by bringing stuff from abroad from countries that have lower costs of production. And as it turns out, for much of the 20th century, transportation technology was fairly static, whereas manufacturing was continuing to advance. You'll see why I'm mentioning that point in a few minutes. But in any case, what we saw was that world trade followed a great wave, a great increase in the late 19th and early 20th century, a great recessional, a backwards movement in world trade for for 40 years. A recovery up to those pre-World War I levels by 1980 or so, and then this hyperglobalization that took place after 1990 or so. There are increasing reasons to believe that that dramatic increase in world trade that we saw over a period of a little over 20 years was a one-time event, that it is not, in fact, something that you can count on to continue forever. You can see that in the numbers. World trade as a share of world GDP, it dropped during the recession and came back afterwards, but it has not resumed its upward march. World trade has been roughly static now for more than a decade as a share of world GDP. It looks like a plateau, not a downward turn, but a plateau. And if we ask why is that the case, the answer probably is that the technological opportunities were a one-time event. They were provided opportunities. Business learned to exploit those opportunities, but once you get there, you've gotten there. So we saw a tremendous increase in offshoring of production, tremendous increase in outsourcing to distant locations. By around 2010, we started to hear stories, see anecdotes, and a little bit of data suggesting that at least some manufacturing was discovering that it had gone a little too far in that direction. That even with very low transport costs, the logistical issues involved in shipping a good back and forth across the Pacific a few times in the course of production are not optimal. That it makes sense to reshore some production closer to markets. As you can see, some of that happening. In the United States, there's been this question, we've been seeing generally weak growth in wages across the board, except for a few skill categories where there has been clearly a very tight labor market for skilled workers with particular skills. And you ask, which are those skill categories? And they're not what you think. It's not actually that we're seeing big wage increases for software engineers. What we're actually seeing is big increases in wages for sewing machine operators. Because it turns out that at least some of the apparel industry has decided that it makes more sense to produce close to markets. And at this point in the United States, there's nobody left who knows how to sew clothing together. So we're kind of short on those sorts of people. And that's an indication. Yeah, it's a trivial story from the point of view of the economy as a whole, but I think it's an indicator that we're looking at a situation where this great increase in globalization that we saw may have reached its limits. Doesn't mean a big downturn in world trade, but it does mean that there's this great wave that was driving a lot of change in the world economy has probably crested. Has probably reached its limit, with one big exception, which we'll get to in a minute. So here we are, and we're looking at the story now. And I think I should say that limits of globalization, that is a concern for some economies. It may be a concern for India at a certain point. Again, I'll get there in a few minutes. But it does mean that, to a certain extent, as new countries try to enter this sphere, they are going to be competing over a somewhat limited pool of business. It's a far bigger pool of business than we ever imagined possible. We used to think that labor-intensive exports were basically apparel and nothing much else. Now we know that there are labor-intensive stages of production for many goods, and so there's a lot of stuff that's available. But if I were thinking about the future for Vietnam or Bangladesh, or possibly as some of the sub-Saharan African nations start to break in, I would be at least a little bit concerned that they missed the moment of the explosion of globalization. And so there's a little bit of a concern there. That's an important issue, but not at least so far yet, a very India-specific issue. But then that brings me to the Indian prospects. So let me give you 3 reasons for being optimistic. I think I'm obliged simply by the title of the summit to be optimistic here. So let me give you, but I actually am mostly, with some qualifications, quite optimistic about India's prospects. I think we're going to be hearing a lot more, and I think over time, when the world thinks about rising powers, it will be shifting its focus increasingly to India, and at least a little bit away from China, which has been the lead story so far. The first one is people, both numbers and qualifications. So one of the panelists yesterday said India has a lot of smart people, and it does. There's clearly a cultural reservoir of creativity, entrepreneurship, on a level that I think back in the bad old days of slow Indian growth, no one could have imagined, but that's clearly there. And look, the widespread fluency in English is an important thing, even as the United States gradually loses its preeminent status. Nonetheless, English is the language of global commerce, and that's got to matter. But also, there's just plain numbers. If you try to think about national economic destinies, it matters a lot how many people of working age you have. If we're trying to analyze, we talk now, there was a time, I'm old enough to remember it, when Japan was about to become the world's leading economic superpower, which obviously never did matter. But also, there's just plain numbers. If you try to think about national economic destinies, it matters a lot how many people of working age you have. If we're trying to analyze, we talk now, there was a time, I'm old enough to remember it, when Japan was about to become the world's leading economic superpower, which obviously never did happen. And it didn't happen for a couple of reasons. One was that the Japanese rapid productivity growth slowed down, that Japanese technological progress didn't stop, but no longer seemed to be unstoppable. But the biggest reason why Japan has receded on the world stage is simply demography. Japan, with very low fertility rates, cultural aversion to immigration. Japan has a working age population which is now shrinking at about 1.5% a year. And so even if you actually adjust for that, Japan's economic performance the past 20 years doesn't look too bad. But it's a declining factor on the world scene simply because there aren't enough Japanese. Believe it or not, China is starting to look a little bit like that. China's working age population appears to have just about peaked now and will be headed downwards in future. And that's a legacy of the one-child policy, various other factors, but China is not going to continue, it cannot continue to grow at the pace it did simply because of population. Plus, I would say in the case of China, a lot of their growth came from taking people from a backwards agricultural sector and moving them into the modern urban sector, and that process has probably reached its limits, so China has reached that point. India doesn't look at all like that. India's working age population is projected to grow substantially. It will substantially exceed China's working age population in just a few years, and will continue growing for quite some time, which is potentially a source of a lot of economic growth. One good way to have an economic superpower is to have a lot of people working productively, and India certainly has a lot of people. So that's a very, very important possibility. Of course, you have to find jobs for those people, and that's going to be one of the issues that we need to worry about a little bit. Come to that in a bit. But assuming that that can work, India has the demography is on India's side in terms of its future economic role in the world. Second source of optimism is simply that India is still quite poor, still quite far behind the technological cutting edge, which is not a good thing, but means that the opportunity for catch-up is still there. I mean, you cannot expect to have the kind of growth that emerging Asia has had if you're already at the technological frontier, which is why Japan, it can no longer be a country of rapid growth. But India is still, so much of India is still far behind, and of course, particularly if we look at rural areas. I was struck again by the Prime Minister's speech talking about rural electrification. That's not, believe it or not, that's not ancient history even in wealthy countries. If we go back to the United States, one of the major projects of Franklin Roosevelt, the New Deal in the 1930s, was rural electrification. Because in the 1930s, most of rural America did not have electric power. So we're now talking about, but the point is that you have the opportunity now to bring hundreds of millions of people into the modern world, and that in turn means that there's a tremendous source of growth, potential at least, that is not available for countries that have already done that. So that's a source of forward motion. The third source of optimism is the distinctiveness of India's role in global trade. As I said, India, it's completely unique and unprecedented to be as much of a service exporter as India now is. Up until the rise of India, all of the success stories in the developing world had been based around manufactured exports. And that's a good thing, nothing wrong with that. In fact, India needs to do more of that. I'll say more in a sec. But for the first time, we started to see large-scale exports of services from a developing country. That is, if we ask why did that become possible, and the answer is information technology, the internet. That is clearly something that there are just many things that used to be impossible to provide except on a very local basis that can now be outsourced to long distances. So the opportunity arose to start doing that, and it starts with relatively low-tech stuff like call centers, moves on to all kinds of information technology, other services. India got a head start. India began doing that before anybody else. Does it on a scale that nobody else can match. The widespread, again, use of English helps on that. This base of very smart people who understand information technology help on that. I would suspect, by the way, that India has a potential, it's already happening, you have a potential base at the very highest level of people simply coming back from Silicon Valley to do enterprise here. So you have that as well. Now, why is that important? Why is that a special Indian advantage? The kind of hyperglobalization that we have mostly seen so far has involved manufactured goods. And the technologies that enable that, containerization, communication, have probably pretty much been fully exploited. The possibilities of service globalization have only just begun. We're only just in the very earliest stages of finding ways to deliver services remotely. And so there, whatever I may have said about hyperglobalization having been a one-time event, the globalization of service trade is still something that is probably mostly in the future. So India starts from an export mix that happens to be especially well suited to the next stage of globalization. That's a reason to be especially hopeful about Indian prospects. I don't think we're not going to see that happening. There will be a few other places that may be able to take pieces of that. We hope there are. You can see beginnings of something like an Indian-style service export sector in the Philippines, for example, and for some of the same reasons, actually. But India has kind of a first mover advantage in the globalization of services, and that's an appealing prospect. Now, one thing to say about that is what we do not yet see is whether service exporting can provide employment on the scale that India needs. And when we talk about demography, it's funny, I've been reading a lot about India's demographic position, and everyone agrees on the fact there's going to be a dramatic increase in the working age population in India at the same time that other countries are seeing a big stagnation or decline in working age population. But half of the stories on it say, what a tremendous opportunity for India to become the global economic superpower. The other half of the stories say, what a catastrophe, we'll never find jobs for all those people. We're talking about mass unemployment. And both of those are possible stories. So India needs to find a way to employ this vast population. It cannot, it is a densely populated country. They're not going to be employed in agriculture. So we need to be talking about growth in other sectors. And probably, despite what I've said about the advantages from the service export focus, India needs to get much more into the global manufacturing game as well. And there really doesn't seem to be any good reason why that shouldn't be possible. But it's going to be necessary. India, in a way, having done something which was unprecedented, which is to diversify into service exports in a way that nobody has done. In a way, India now needs to diversify back into manufacturing as well in order to provide the kind of job growth it needs to make use of all of the people who will be coming available. So that's that is a question, but I still think that the unique nature of India's export boom does put it in a favorable position relative to other emerging markets in the decades ahead. Okay, let's talk about reasons for concern. So one very broad, there's a now widely observed phenomenon. I started by talking about how depressing it was to look at development economics 40 years ago because there were no success stories. And since then, there have been many success stories, China and India being the two most dramatic, but quite a few other success stories. However, there have now been enough success stories that we're starting to get some pictures of the limits of success as well. And there's a now quite well documented phenomenon called the middle income trap. And by the way, it's a great privilege. You should be wildly encouraged that India has reached the point where we can now start to talk about the middle income trap. You have to make a lot of progress before you get to that point. But it turns out that it's quite common for countries to grow quite rapidly up until they reach, it varies, 20%, 50% of the per capita income of the wealthiest countries. And then they kind of stagnate, or at least slow down dramatically at that point. They don't seem to be able to close that last gap between themselves and Northwest Europe or the United States. And what's that about? I mean, it's a statistical observation. What's it about? And the answer, as best we can tell, this is somewhat speculative, but we think what we see, is that institutional problems, institutional failures that are tolerable when you're still a poor, low-wage country, start to become bigger obstacles once you no longer are in that position. One can no longer compete simply by being much cheaper as a production location in other places. You start to in a way, the future economic progress requires a quality of institutions that is higher. You need to get better at some things. And that can include a wide variety of things. It can include issues of corruption. You can have a very corrupt economy, which as long as the corruption doesn't totally prevent business from being done, and it has low wages, it can still grow very rapidly, but at a certain point, let's put you can't become Denmark with Chinese levels of corruption, right? You can't. You have to clean up your act in order to be able to really compete at the highest levels. Government, efficient, effective government, including efficient provision of government services. Again, it doesn't have to be all that great at lower levels of development, but it needs to get much better. Banking. The banking system has to, the banking system doesn't have to be great when companies can largely finance themselves through reinvestment of profits, or when the investment opportunities are so large that even a not very effective banking system can do the job. You need to get a lot better at that in order to be able to close that final hurdle. And so you all know India far better than I do, but it's not hard to see that India needs a lot of institutional progress, needs to go a long way to get up to the kind of performance that one sees at in the most advanced countries, and that means that India is potentially susceptible to running into this middle income trap. Okay, I see I'm hitting limit here, but let me just say two things that may come as surprises to you in terms of threats. One is artificial intelligence. I mentioned that there's kind of a race between transportation costs. I mentioned that there's kind of a race between transportation costs and productivity in trade and goods. We're now starting to see in services that there's a little bit of a race between globalization and AI. Suppose that you want to get interpretation of medical data. Tests are performed on somebody in New York. They can be interpreted, well, could be interpreted by somebody here who's paid a third the wage of the comparable person in the US, or they could be interpreted by an expert system. So you can outsource it to India, or you can outsource it to cyberspace. And there is something of an issue here. There's a possibility that some of these service opportunities will be foreclosed by AI. I won't say very much more about that, except to say there's fantastic stuff happening on both fronts, but we don't know. There is some competition. And finally, let me just say that the advanced countries are a mess. And although emerging markets have been moving forward, the advanced countries are still very troubled economies. We're over the worst of the Great Recession, but not for very much. In the United States, we have recovered, we have full employment, but we have interest rates that are still barely above zero. We have no shock absorbers in our system. So if something goes wrong, we have no good way to respond to it. Europe is still not fully recovered. We're still very, very vulnerable in the advanced countries. This open world trading system that has been so crucial to the progress of developing countries is obviously under threat. Populism is on the rise politically all across the advanced world. In addition to systematic populist backlash, you also just want to include the possibility of just plain irrational policy, lashing out. There's no guarantee, it turns out, that even in the most advanced countries, people who have no idea what they're doing may end up in charge of economic policy. I wonder what country I have in mind. Anyway, but so the global system is under some risk, and that poses a threat. But let me just end by saying the story so far of India is wildly, wildly encouraging. If someone had told me 40 years ago that India would look now the way it does, that India's prospects would have looked the way they do, I would have said, you're dreaming. If the person had been Indian, I would have said your patriotism is leading you into bizarre optimism. In fact, it's a marvelous, incredible story, and probably the future looks brighter than the past does. Thank you all very much.
Thank you very much, Professor Krugman, for a very well-rounded perspective spanning a century and several paradigms. Let me start where you ended, populism and protectionism. We, and I'm sure many of us here, are more worried about that part. Prime Minister Modi raised that as one of the dangers in Davos, and he spoke about terror, climate, and protectionism as the three dangers. Now, go back to the United States itself, the U.S. deficit to China is as high as $375 billion, and President Trump is already talking about imposing tariffs on another $60 billion of Chinese imports. How do you see this panning out? Will there be retaliation? Will that bring down global growth? Is it going to look really terrible in a year or so?
Okay, so the political economy of protectionism. First of all, just will this happen? Are we actually going to see a trade war? Are we going to see widespread imposition of tariffs? Until about 2 weeks ago, I was in fact quite optimistic that it would not happen. And the reason was not because the president would get good economic advice, but because U.S. business is so thoroughly invested in a globalized economy. These value chains where a product is produced in many places are pervasive. All of the investments that business has made for the past 20 years were based upon the assumption that an open trading system would continue. And so there's an enormous amount of physical capital, of past investments that are at risk. There's actually a large number of jobs. People complain about it, but in fact, there are an awful lot of jobs in the United States and in Europe which are in plants whose existence depends upon the continuation of these value chains. Now, the problem is, I had assumed that the influence of the business community would be sufficient that whatever the protectionist inclinations of Donald Trump, it wouldn't happen. I'm a lot less convinced right now. We've just seen his reasonably sensible National Economic Council head fired. We've just seen a completely irrational set of tariffs imposed on steel and aluminum. So I still think that probably we step back from the brink. The risks are certainly up now, 25 or 30%, that we will see a really disruptive global trade war.
You would expect Chinese retaliation. So, how serious can it get, and how quickly?
Things can move. By the standards of internet time, they don't move that quickly, but we could be talking about over the course of a few months. The most immediate issue, I think, is going to be actually confrontation not with China but with Europe, because the steel tariffs are going to hit the Europeans, and the European Union, whatever else its limitations, operates as collectively on trade, and it's just as big as the United States. So there will be widespread retaliation against U.S. products if this goes through. And in the case of China, now you might say, well, China runs this huge surplus with the United States. How much retaliation can the Chinese do? But here's where the complexity of the global value chain comes in. The U.S. runs a large bilateral deficit with China, but much of the value of those products is actually not Chinese. It's actually from other places, including Japan. And so the possibility of a souring of relations on trade, not with just with China, but with the whole of Asia, becomes very large. So no, we could get, you can easily tell a story where a series of tit-for-tat, not just retaliation, but as friends of mine used to say, the biggest danger is not retaliation, but emulation. If the United States doesn't play by the rules, who else will? And so that could be a really big deal.
Well, what about the US Federal Reserve? I mean, there is a huge fiscal deficit that will come probably because of the cut in taxes and the expenditure. And at the same time, if you have problems of tariffs, that also increases the cost to the economy or inflation. So should we expect very quick increases in Federal Reserve rates? And if that happens, what happens to countries like India? Will there be a problem of financial dislocation? Okay,
India is less exposed than most. But yes, I mean, I think we are looking at faster Fed rate hikes than previously anticipated. This tax cut is as an economic stimulus, it's very badly designed, but it still increases the deficit quite a lot. If we have tariffs, that also is inflationary. Probably not exactly expansionary, but anyway, it's and the Fed. There's been a noticeable shift in tone from the Fed. I've been, we look a lot. I follow insider tip. Follow Lael Brainerd, who is probably the most dovish member of the board. And also one of my students, by the way. But anyway, but she is sounding much more hawkish right now, and that's an indication that I think the Fed is heading for higher rates. Now, India is not heavily exposed with large dollar debts. Some other emerging nations could be really quite badly hit.
Well, I will try and take questions from the audience. So the mics will come to you. Let me just fit in one more question before the mics go, please, to this table. Professor, what about China itself? I mean, Xi Jinping has just gotten himself elected probably for life. How do you see Chinese instability panning out?
Yeah. By the way, this is a huge disappointment for global optimists. I mean, one thing that we had hoped was that economic progress and gradual democratization would go hand in hand worldwide. That we would be seeing no one expected China to turn into India politically overnight, but we were hoping that it would move forward, and instead it's moving backwards to strongman rule. Now, China, I would say that China is a financial crisis waiting to happen. Trouble is, I've been saying that for about 7 years. So, but that doesn't mean it isn't still true. China is a wildly unbalanced economy with still investment of almost 50% of GDP, sharply diminishing returns to investment, not enough consumption demand to justify the investment, unable, even with all that, to generate the kind of growth rates that would justify the investment. And what they've been doing is they've been sustaining it with a credit bubble. And you keep on thinking that one of these days it's going to crash. It keeps not happening, but we do have something we call Dornbusch's law after one of my old teachers, which is that the crisis takes longer to happen than you could possibly imagine, and then when it comes, it happens faster than you can possibly imagine. So I do think that there's a significant risk of a Chinese bubble burst, and having a government which is strongman rule, lack of deep-seated political legitimacy is not something you want at a time like that.
Oh, well, there's Navneet Munot over there. He manages several trillion rupees of funds from the State Bank of India's mutual fund. Go ahead, Navneet.
Hi, Paul.
If you can stand up, please.
We are all concerned about the reversal in the trend of globalization, but can it lead to another globalization, which is the globalization of localization? Everybody tries to produce locally, which leads to higher investment, reduces income inequality, and also lower environmental footprint.
Okay. So the answer there is, the possibility of a trend towards localization is real. I mean, that has happened before. That happened in the interwar years. It happened in developing countries after they gained independence after World War II. It didn't work very well. It was a failed strategy of economic development. In terms of environmental footprint, look, shipping of goods is not a major source of greenhouse gases. It's some, but you know, the overwhelmingly most important source of greenhouse gases is coal-fired power plants, and after that, it's personal transportation. It's cars and trucks, and it's this is not really an important. This is not where you would want to go if you're worried about the planet. And income inequality it just won't make that much difference. I mean, back of the envelope, I've asked, what would happen if the United States got into a trade war and that basically just shut down and we eliminated our trade deficit completely? You know, we used to have 35% of the workforce in manufacturing. We now have only a little bit over 8% in manufacturing. Suppose we did all of that, how much manufacturing will we get back? And the answer is we would still be under 10% of the workforce in manufacturing. The sources of the big changes in income distribution are not primarily globalization. They are technology, they're changes in political institutions. This is not a solution you should be looking for. Oh, and the impact on some countries. Try to imagine what would happen to Bangladesh if the possibility of apparel exports, which is really what keeps that economy afloat, was cut off. We would be talking about Malthusian crisis. So this would be a terrible thing if it happens to the world.
Oh, well, I think we have time for only one more question, and since the mic is already there.
Yeah, Professor Paul.
If you can introduce yourself as well.
Dr. Sarjeet Dudeja. Professor Paul, can you share your perception about the mind of President Trump? For last so many years, he has been very rhetoric, and now he has changed to have a friendly relation with North Korea. Is it a economic or political or social compulsion because China and Russia is taking support to this North Korea? How things are moving that way?
Oh my. Gosh, I thought by coming here I could get away from Donald Trump, at least for a little bit. No, I mean, the trouble is that, I mean, as it turns out, we happen to have someone in the White House who is not at all given to, he doesn't take the job seriously. He doesn't say to himself, I am the most important official in the world. I had better do my homework, try to understand the issues, try to pick the best people. He just goes with, these are my gut feelings. I'm going to hire people who make me feel good. That is a pretty frightening prospect. And certainly on these economic, well, both on the, I mean, the fact that of nuclear weapons, that I don't even want to think about that. But on the economic issues, not only is it, his gut feelings are protectionist, but he has an image of the way things that should be, which is about 50 years out of date. He wants America to be a heavy industrial country in the way it was when he was a young man. And that is just not going to happen. But the attempts to make it happen can be extremely destructive to America and to the world as a whole.
Professor Krugman, we're completely out of time. I know there are questions, but the next speaker is waiting. Thank you very much, Professor Krugman. 2 gems I take away from this conversation. You don't get to Denmark levels with Chinese levels of corruption. There's a lesson for all of us there. And the other gem, President Trump is not taking his job seriously. That's interesting. Thank you very much, Professor Krugman.